Looking at our stock stuff for the day. There we go. Need to get it a little bit bigger. In the Yahoo Finance, we got a few pieces of information. Why investors should stop fixating on Apple and Tesla stock. Okay. What to watch in the markets on Thursday. Like, don't just watch Apple and Tesla, even though Apple definitely carries its own weight. I don't know if Tesla carries that same amount of weight. I think Tesla is just I won't call it clickbaitish, but close enough that it's kind of the clickbaity stock. It's like everybody's interested in what Tesla is doing because of all the stuff that goes along with the drama. We like dramatic things even on TV, and Tesla seems to always come along with the dramatics. Stock futures wobble ahead of economic data. Silvergate race to cover $8 billion after FTX wreck. And is now the time to buy battered tech. And if you're dollar cost averaging into anything, you would definitely be, still buying. And sometimes it's hard to dollar cost average into something that you were buying at one price that you thought was like, let's say, for example, SoFi, which was up in the $12, $15 range, that is now $5. Now, the good thing about it, you think, if I liked it at 12, then it's really desirable at 5. You're buying low, but your thought definitely has to be that you have some anticipation that it will grow. I guess Apple and Amazon and Google and all those would be in that same boat. Those are good, strong companies. And if you're dollar cost averaging into those areas, then you would expect that longer term, you're going to be fine. Dollar cost average basically means you're going to buy a little bit on a consistent basis, or buy whatever bit. It can be a lot of bit. It's really whatever you choose, but you're buying it on a consistent basis. So you're buying it no matter what the price is. That's dollar cost averaging, in case you didn't already know what that was. Our pre-markets, the Dow is down 38 right now. S&P futures is down 1. Basically, it's flat. NASDAQ is up 2.75. Oil is green, and the U.S. 10-year bonds is green as well. Asia, everything over there is green. Asia Pacific shares rise as investors digest private survey data on China services. Don't know what that's all about, but everything's green over there. I talked to my friends that are in China. I have friends who still live in China, and we usually talk about once a month, once every couple of months. And they said that basically they were getting tested all the time still, and were doing all these codes they had to do. And she said, and then China said, you stop it. You don't have to do it anymore. And she said, like, immediately after they stopped it, it seemed like everybody was sick with COVID. She's like, it went from like nobody when we were having tests and stuff done, and then the next thing you knew, it was like a wave ran through. And I was like, well, and I was like, I don't know if I feel like COVID seemed to be worse in China than everywhere else, or that it's just not being talked about everywhere else. Not that it's not any worse or better, because of course COVID is still here and people are still getting sick with it. But it's like, it's definitely discussed a whole lot more in China than I guess the rest of the world was like, we just moving on. This is all a part of life now. We'll just keep it pushing. So they loosened some things up. She said they're in the quarantine now. You don't have to quarantine at a hotel anymore. You can quarantine at your house. They recommend that you quarantine at home. You just looked at the US. Now looking at looking at Europe. The European markets are flat as investors digest the Fed data. So they've got a good mixed bag in the European markets. The DAX is up 24, down 24, sorry. FTSE is up 36, CAC is down 8, FTSE MIB is up 35, and the stock 600 is up 0.02, basically flat over there. Okay, what about our calendar for today? Yesterday, we had several things that happened in our calendar. We had 2 sets of red folders at 10 o'clock. And then we had the FOMC meeting minutes at 2 o'clock. There was a spike up and down at that window. I'm not sure if it was a big enough spike if you were doing a straddle, but it did seem to be a pretty good little candle there we'll look at in a minute, but that was yesterday. And today we have a red folder at 8:15, which is the ADP non-farm employment change, which has already been released. And at 8:30, unemployment claims and trade balance are being released. That's a few minutes. And 9:45, final services PMI, natural gas storage at 10:30, crude oil inventories at 11. So these are all yellow folders. The unemployment claims is going to be an orange folder at 8:30, which is a few minutes. We'll see how that goes. And tomorrow we've got some red folders. So keep that in mind as you trade today for tomorrow, or you trade today for today. Credit spreads on other equities with the close tomorrow. We've talked about that a little bit. That's maybe an option for you if that's of interest to you. So this was SPX yesterday. This is the 5-minute chart. I was looking for the 2 o'clock candle, which was right here. This is the 2 o'clock candle. You can't see it very clearly here because of these red lines, but the wick, this candle went from, where was the top? The high was 38.68 and the low was 38.39. So this candle here is a 30-point candle. And then it did its thing and came down some more. So if you had a straddle, by the time it did and dropped down to here, which was 38.28, you should have hit your, if you had a straddle, you would have hit your profit target by this point for sure. I don't know if anybody did a straddle yesterday, but if you did anybody do a straddle? Did anybody do it in their sim or live yesterday? No? No one? Okay.
Arlissa, can you go over when to do a straddle?
Straddles generally would be used on days when you're going to have a high volatility event. It seems like the FOMC days are prime candidates, and I'll say FOMC days. It's kind of FOMC announcements. If Jerome is gonna speak, that usually seems to be a day. FOMC with the red folder seems to be a day. Sometimes we get, like, if they have a meeting or they're going to make an announcement or something, if they're having a press conference, those seem to spike a little bit. And I think we've got a couple of other. Jamie, what other red things did we look at besides FOMC stuff? I think that was all. Fed announcement seems to be the major one we looked at.
The main one has been the FOMC, when it's the announcements and meetings, and it's like 3 or 4 things happening in a row on that same day. That's the main one. Sometimes unemployment can trigger, or employment, depending on which side you want. I know that it's a red folder, and then those are the 2 main ones that I can remember. FOMC and related to unemployment.
I don't know if Lori's here. No, I don't see she's here. But yeah, those are the ones I can remember. Does anybody else remember what we had looked at? I think it was just those, though. We did like a little back test time where we looked back at to see how things would go.
Flash services a couple times had a spike, but it's not as consistent as the FOMC.
Seems like the FOMC seems to be the consistent one. And a straddle is basically buying a call and buying a put at the same place with a profit target in mind. So that way, when the volatility swings like it did, like in here, then while one side is going down, the other side is going up. So the upside will supersede the loss of the other side. So it's like if the price goes up, then the put side would go to 0 or go close to 0, but the call side would be making money, and the other way around. So you do them when it's highly volatile times, but you don't know which way it's going to go. If you're not sure if it's going to go up, you're not sure if it's going to go down, then you could do a straddle. The drawback to straddles is they can be expensive depending on what stock you're doing them on. Some people have used them on SPX, but they can be, if you do a straddle on SPX when the volatility is high, you could pay $10,000 for for this straddle. You could pay maybe $8,000 to $10,000 for those two contracts. So if you do it on SPY, it's a little cheaper. Well, a lot cheaper. Let me take that back. It's a lot cheaper if you do it on SPY.
So what is the cost coming from?
The cost comes from the volatility. The contracts just are expensive, and you're buying them at the money. So you would buy, if the price was like yesterday, the price was right around 38.52. So let's say you bought a 38.50 call and a 38.50 put at the same place, you're at the money. So you're paying a virtually max price for it because you're expecting to get all the stuff you're going to get. So that's what makes it expensive, the volatility and the fact that you're at the money. But they seem to, with that's a time when people use straddles, and the volatility is what seems to have them also to pay off. But it's always good to have a thought to what you want as your price target. So if you, paid, let's say $1,000 for a straddle on SPY, then you should have a price target of, $100 or $200 or $300 or whatever your price targets are. You should have a price target of what you want to get back out of that trade. You're gonna on the front side, so not like deciding along the way. That's something that you should want to, you want to think about beforehand. What is it? What do I want out of this trade financially, so that when you can preset it when you open it, you can also preset your exit. Okay,
and this is definitely going to expire.
Well, you can buy it for a subsequent, you can buy it for the same day or a subsequent day. I think if I was going to buy one, because you're buying calls, and that's buying, that's not selling. So that's something you want to close.
Oh, okay, I got you. I think I woke up. Okay, this is a buy.
Yeah,
okay.
When you're buying contracts, you want to close them yourself, because when it gets to what you want it to be, you want to close it.
Okay, thank you.
Looking at our daily chart to see what we have for, if we have any new zones that were created. Come on, let me get a little bit bigger. I got a lot of lines in here from yesterday. Yesterday at the end of the day, we had a few gaps that formed. We had a few gaps that formed in those last few minutes. Yesterday, the last few minutes was crazy. But if we're here, looks like we've hit this even in the this is our daily. I'm trying to make sure I'm seeing my greens and my reds. I'm like Miss Phyllis, I need to wake up too. Looks like our support zone would be down here at 38.41. We're looking at supports. I think we're still not really out of this whole zone we've been in for several days here. We haven't really come out of this. The price action seems to have moved out of it a few times, but we can't seem to open and close outside of it. So we're still really between 38.70 and 37.83 down here. So we're 85 if you want to. So this whole 37.85 all the way up to 38.70. We're still in this zone that we've been in for several days. So according to Adam, we're positioning, or it's building up steam in order to make a big move. We'll see what moves it. Moving to the 15-minute chart. There's a support down here for sure. We need to add this one in. The support at
Did he say when you said that he mentioned a move, did he mention in what direction he thought it was going?
Nope, he just said it's setting up for a big move.
Okay.
Yeah, I was wondering with this projection of a recession, or someone else said it was a slow session, how it's gonna, yeah, slow session, how it's gonna affect the market.
Yeah, I think it's kind of already, seems like it's already doing something. Looks like on the 15-minute chart, we've got 38.30 appears to be some support, and now 38.50 is still, those were two things that were mentioned yesterday in the numbers. 38.30, 38.50, 38.65, 70. These are some of the stair steps going up. So again, we're just hovering in this zone and like creating new supports and resistance in this area.
I think the thing to note about this situation is this is a perfect example of there's no buyers or sellers that's really dominating right now. And that's why it's consolidating and kind of bouncing in that area. But it's been about like 9 days.
Yeah, 13.
9 business days where it has been consolidating there. So the truth is, something is bound to happen pretty soon. It'll be interesting to see what it's going to be. But I have noticed that it seems like every time in these 9 days, it seems like the buyers seem to be pushing up more than the sellers are pushing down. That's what I've been noticing based on some of those wicks. That doesn't mean anything, let's say, overall, but the buyers definitely have been pushing back.
That's true. Alrighty, so let's look at what we have as some zones and stuff from Adam. So day 13 of CHOP as ESF builds the deepest range in years. 38.50 for us. This is, I'm putting what the SPX numbers are in red. So 38.50 was key support. It was tested 3 times since yesterday. 38.20 to 38.95 is the noise, which basically we've seen as 38.70 and 3800, or you really could say 37.95. Don't want anybody shortchanging the zone. 37.95 to 38.70 is noise to set up a multi-day trend. The plan for today is 38.70, which here would be 38.45. 38.48 to 58. This would be 38.23 to 35. Nope. If we take away 25, this is also a 3. Supports 38.95 would be 38.70. 39.15 would be 38.90. Is in play as long as it's defended. If 38.45 fails, then we see 38.20. So this would be 38.20, and I'm running these lines. I'll put this in the chat so we can see what. So you can translate the numbers to numbers that we look at on SPX, because the numbers on ES are about 25 points higher. So I'm just subtracting 25 from each of his numbers in order to provide us with some numbers that use as our support and resistance zones. Even though we've just charted them, we can see what is charted. So, but this maybe adds a little more, adds something else to that. Yeah, questions here?
Can you keep that up for a second, please?
I'm getting ready to put it in the chat.
Oh, okay.
Yeah, so that it'll be there to be captured again later. Okay. Alrighty, so let's look then at yesterday. SPX was up 28, which some of this push happened at the end of the day. Oh, I was going to show y'all that end of the day gap up looking stuff. It was crazy. This is what happened at the end of the day. Many of us were on the call. By the way, we're doing the power hour at 2:30. So we're getting prepared for the challenge, which is next week. And we just want to do power hour at 2:30. So you should be receiving emails. I think the one I'm going to send out today will talk about exactly what the challenge, each day of what the challenge is going to be. Don't forget, open house is going to be on Saturday. Open house is basically you can invite anybody you'd like to see what we do in the membership here. And how can we support the traders? Because that's really what we're here to do, is to support traders. So this was our last bit of fun at the end of the day. We had a gap up. This is the 5-minute chart. So it gapped up between 38.36 and 38.38. And then it gapped up between 41 and 43. Now we had some people who had 38.25 who were getting a little nervous, but they made it. This is another benefit of the membership, by the way, is we're together, and where individually you would be nervous enough and be taken out because you just don't know, should I hold on? Should I let go? What should I do? But when you've got several people who are with you together, and all of us, and all of you, I wasn't there, was like holding on. It's you that support it was one of the intangibles that I mentioned in the email. Is that's an intangible that you can't necessarily put a dollar figure on that, but just having the support of somebody who's right here to virtually hold your hand when the times get tight, when you're nail biting, as we do, is we got the natural symbol, the national symbol for nail biting. When you're nail biting, you need somebody to just kind of stand there with you. Just be here, talk me through it, let the minutes pass. Let us watch together. So that's what we end up enjoying some time with that yesterday. Definitely. Alicia said she was like, I just can't do this. She's like, this is too much. But she made it. They were right down here at 38.25, her and Christine, and I think someone else was too. Was it Naomi? I think it was. Someone else had 38.25 as well. And we just wrote it out, listened to our little calming music, and talked our way through it. So that was yesterday. Yeah, Alicia, you were one. All righty. So our futures now, ES futures now, this information is a little bit slower. It's registering at 8:35, which is 10 minutes behind the market, because the market, we got the unemployment claims, I guess, came out a little while ago. It's at 38.55. We're down 20 right now, 19.5. You're down. So we're red there on the futures for the SPX futures. The Dow is down 50 as of let me refresh it. Oh, it's down 182 as of right now, seeing that we're closer to time. I guess they didn't like the unemployment claims numbers. At this point, we're down 182. SPY is down this morning. It is down $1.66. Triple Q, which is our little techie boys, is down $1.28. And IWM is down almost $1, 90 cents. Let's see what the VIX is at right now. Well, the VIX is at 10 minutes ago. It's at 22.42. The VIX kind of has been hanging in around the mid-20s, mid to low 20s, between 20 and 25. It's been just kind of hovering in this area. So we've got the VIX we've looked at, which is in the 20s. The Dow is down almost 200. The SPX futures is down about 20. Well, it was 10 minutes ago. So these things could potentially point to an open that would be, a down opening. open with a gap down, but you definitely want to trade what you see. Always trade what you see. All righty, we don't trade what we want to see, we trade what we do see. All righty. If you're a morning trader, then now you've got a little bit of data to help you kind of set up. We're about 45 minutes away from the market opening. So this gives you a little bit of information to check out. I'm trying to get Thinkorswim to open so I can look at the ES currently. Anybody got questions while I get this running? Comments, concerns? Thank you. Wait. It's opening up. You know, anytime you want the computer to move a little faster, it just doesn't. Oh, I wanted to talk about making sure that you update your folder thing in the accountability area. If you are part of the accountability group with Saida, I had to go looking for the chart yesterday to make sure I could go back to the chart. And I was able to find it. /ES. That's what we're looking at this morning. We were up in the 3880s, and now we're falling down to 3855. A little lower than the, let me see what time frame. I'm on the 15-minute time frames. It's been actually falling since about an hour and a half ago. This is 4 candles, 6 candles. It's been falling for a little bit of time. Okay. This is where we currently are. All righty. I think I've covered everything I was supposed to cover. I always feel like there's something I missed. And then after it's all over, I'm like, I meant to talk about that. It always happens. Okay, don't forget, we'll be on at 2:30 today for our power hour, hour and a half.
I probably should text you this, but so why did we move it back to 2:30 again?
We moved it to 2:30 so that way we can really start to encourage strongly that we not trade till the end of the day.
Got it. All right.
Okay. So if we are supporting the end of the day trading, hopefully we will. This is all part of the movement of trading for less than 2 hours a day.
Gotcha.
Mm-hmm. And I think even for those who trade first thing in the morning, if you can still function with the trading less than 2 hours a day, as if you're doing your trade, either you're going in and coming back out, or you're going in and setting your PDT hack. So even if you're doing either of those two things, you still can function with the trading less than 2 hours a day, right? Once you get in, catch the momentum, put your PDT hack on, and then you're free for, to do whatever the rest of the day. Even if you want to come back at 2:30, you can, but you at least we're still shooting for that objective of trading less than 2 hours a day. All righty, our declaration. I declare I am a great trader. I declare I am a successful trader. I declare I am a focused trader. I declare my wins exceed my losses. My account is growing more and more each week. I am a wise and knowledgeable trader. I always make smart and lucrative decisions for my portfolios. I declare I am a level-headed trader who does not trade my emotions. I declare that money likes me. I declare I'm a blessing to others, and I declare I am a world changer. Lord, it is you who gives us the power to get wealth. Deuteronomy 8:18. You teach our hands to war. 2 Samuel 22:35, with the purpose of establishing your kingdom. Help us today to trade wisely and strategically in order to fulfill this purpose. Give us more than enough so we can have what we need and enough to be a blessing to others. In Jesus' name, amen. Amen, amen. All right. Amen. Oh, there's Lori. Lori, one question that came up earlier was if there was any other events that we back tested for the straddle. I know we talked about the FOMC and the Fed minutes. I couldn't remember that there was another event that we saw would be worthy of straddles. Is there another?
I don't know of one that's consistent. I've been looking at it for earnings, but earnings is kind of tricky because you have to look at past earnings for a company just to see if that movement historically has been there. So earnings, like Straddles will work with some companies for earnings and not others for earnings. So it takes a little bit more research, and I don't have a clear cut like plan or some points yet. So I don't want to tell anybody to try to earn this because you could lose your money.
Right. So I just remember, I know we back tested on FOMs for FOMC days. I didn't think we back tested anything else, or I had forgotten, but
No, that was the only one that was solid. And when we got together and back tested, that was the only thing.
Okay, gotcha. All righty. Thank you for that. All right, everyone, we're going to stay green. We're going to get this money. You know, we're in the chat if you need anything or you just want to hang out and talk about what you see. And then we'll see you again at 2:30. All righty. Bye, everyone.
Bye-bye.
Bye-bye.